Today, I'm going to show you the exact plan that I have in place to make my kids millionaires. I call this the Millionaire Kids System. Hey, if you're new to the channel, my name is Sharran Srivatsaa, and I used to be a banker at Goldman Sachs and in Credit Suisse on Wall Street. Since then, I've had a chance to build and sell multiple companies and also run a publicly traded company on the NASDAQ. I'm just a random handsome guy on YouTube, and I'm sharing with you my personal formula, exactly what I am doing with my children and with my family. This may not be based on where you are in your life. This may not be the right exact fit for you. However, it gives you a chance to see what is actually possible, because I was not handed anything, but I think that if I gave a chance in a protected way for my kids to have a great future, for them to borrow and start a business, it could be a fun thing to do overall. So I'm trying to set my family up and give them something that I never had. So this is my gift to you. And please do your own research to see if it's the right fit for you overall. All right. So I call this the Millionaire Kids Method. And I'm going to give you the exact plan that I'm utilizing right now to help my children. This is the Millionaire Kids Investment Plan. And this is the plan that we're using for my family through our family office that I'm implementing myself. So I want to share this with you overall. There are 4 parts to this puzzle. Part number 1 is the passive income operating system. My money coaches, Russ Morgan and Joey Murray at Wealth Without Wall Street, taught me how to do this. They helped me put this plan in place for my children. So I want to show you exactly how this works and how you can benefit from this. Number 2, I want to show you the idea of how you can get paid to wait, meaning there's this concept of lazy cash and how you actually fix that concept and make it work for you. The third is my children are young. They have many, many years ahead. So how can I give them and put them in the right growth vehicles that can benefit them? And most importantly, you want this. If not anything else, you want this, because all these 3 things connect with this. I want to give you the golden ticket. My friend Robert Pereira, who's a CEO of ARC Multifamily Group, taught me this. And as soon as I realized this, everything in my life changed. I knew exactly what I wanted to do. And I hope you recognize this, you do this, because if you did this, it will change your life and the financial bloodline of your family forever. So let me break down. I'm going to write and draw. I've got nothing fancy. I'm going to show you everything that we do. And hopefully this is a good blueprint for you and your family overall. So the first part of this is the passive income operating system. And my money coaches, Russ Morgan and Joey Murray at Wealth Without Wall Street, taught me this. And what they taught me was this idea of, let's say I have 2 children, a boy, my son, and my daughter, my boy and a girl. And so instead of putting money in the Roth IRA or the 529 plans or what have you, what they taught me how to do is to create a series of very intricately designed whole life insurance policies as a store of value, as a cash flow system. And so on a quarterly, monthly, annual basis, I contribute to this system for them, and it goes into these policies. And you may say, Sharran, well, why do you do that? Why is that beneficial? It has several reasons. 1, it's asset protected, so no one can access it. Number 2, you can actually borrow from it. So my son and my daughter can actually borrow from this policy. And the best part is this: when they borrow from the policy, the value of their money in the policy continues to grow. So even though they're borrowing from the policy, the value of the policy continues to grow. So you get an insane leveraged effect in this entire process, right? And then they can take that borrowed money and make investments out of it. They can go buy an investment property. They can go, invest in Bitcoin, whatever they want to do. The most important thing here is to create a passive income operating system. So if you can go check out Russ and Joey's podcast. It's called Wealth Without Wall Street. I'll link up the show notes below. And you can understand how you can build a passive income operating system for yourself and your children as well in this process. The second one, a lot of people like this. I'll give you the second one. This is more opportunistic. And I have, for both my son and my daughter, I realize that the public stock markets are actually a good thing because it gives them the gift of time, right? And the gift of time, we've known, if you're systematic over time, you win. And this is why we call this a system, an operating system. So if you're systematic over time, you win. So the opportunistic nature about this is I have a deal with my son. For every book, he's a voracious reader. For every book he reads, he gets a certain amount of money. And then he invests that money in the market. And he, in fact, I've helped teach him this, and I actually work on this with him. And so he's like, hey, if he believes that AI is going to do well or technology is going to do well, he's like, hey, I want to invest in XLK, which is the technology spider ETF that actually can grow. And in fact, I will tell you, this investment process, my son has done really, really well because he's picking themes of companies that he likes. He thinks that companies are going to grow, and he has a much longer term view on this. And the same process with my daughter. Now, the key thing here that I want to tell you is it allows me to talk to my family about money. It allows me to talk to my family about money. And this is the key that I want to give you. Most parents have not been raised where people talk about money. You want to make the money conversation both confidential within the family confines and also open. So now my children are very happy to talk to me about money. They understand the concept of investing. They understand that, you wake up in the morning and you go to work. You wake up in the morning and your money goes to work. Right? And they understand that concept. And that's very, very important, which brings me to this next big idea of lazy cash. I'll tell you this, my money coach, Joey Murray, always has this idea, and he's like, hey, Sharran, that's lazy cash. And lazy cash in his definition is, let's say I'm making up numbers here, okay? Let's say I have $100,000, make just easy to, sitting in a bank account. And it's doing nothing. It's just sitting there, making me feel better about myself. Now, it's not an emergency fund. It's nothing. I've just not have any kind of plan to do something with it. And this is what Joey calls lazy cash. Because he says, hey, when you wake up in the morning, you go to work. And when you wake up in the morning, your money goes to work. And it's really important to think about that. And that is the concept I've been teaching my children, is how is your money working for you? Because that is the ultimate leverage. When you can deploy resources and the resources work for you, that's when something is really, really powerful. Now, the reason a lot of people hold on to cash is they hold on to cash for 3 reasons. 1, it makes them feel safe. That's okay, right? Number 2, they have some kind of saving plan in mind. Or 3, they just don't know what to invest in, so they're waiting. And all 3 are okay. This is generally the reason. So the first one of feeling safe, let's actually talk about this. It's super important. Of feeling safe, it is not the cash in the account that's important. It is the access to the cash that's important. As I shared with you here, in this system of life insurance policies, even though the cash is there, my son can borrow from it. He doesn't have to have the cash stored. He has access to the cash. So it takes away from just feeling safe because he has access to the cash. The second is you're probably saving to buy a house or saving to do whatever. Well, isn't that the same? Isn't that the same as having access to the cash? So you could put both of these in what we call the passive income operating system, right? But most importantly, a lot of people just don't know what to do. They don't know what to do while they wait. Maybe they just don't have an active investment. They don't know what to do with it. So I talk a lot about this idea of I'm looking for opportunities where I get paid to wait. I get paid to wait. Man, I really wish someone had taught me this when I was younger, to get paid to wait. And so I'll tell you where I'm getting paid to wait right now. Private credit is one of the vehicles right now that we're getting paid to wait. Now, there's a couple different places that you can get paid to wait. You can put your money in a CD ladder at the bank or CDs at the bank and say, hey, you hold on to this money for a year and then we'll pay you like 3% or whatever it may be, right? You could do that. This is not bad, but you're still getting paid to wait, which is better than your Bank of America account. Or if it was in your life insurance policy, you would do better anyway. I like private credit for one reason, because what is private credit? You're making loans to private investments. And making loans to private investments are generally of 2 types. They're probably companies or real estate. And what I mean by this is companies are backed by the assets of the company. And in some cases, it may just be inventory or just nothing. And the real estate is actually backed by a building or a house or something like that. And to have access to, so a lot of times it's very hard to get access to private credit and private companies unless you are in the game, right? And you have to do a lot of diligence to invest in these private companies. I've done many. By the way, I'll tell you this: I've done many. I have lost a bunch of money doing this as well. So do your own research. And this is me telling you. I'm just a random handsome guy on YouTube telling you my experiences overall. But you know this. Uh, so I'm spending a lot more of my time investing in the private credit component in private real estate. My friends at ARC Multifamily Group, I can put the link below, are have a great option right now where my children are investing. They're getting paid to wait. They're investing in a deal which pays them 10% for 6 months. And at the end of the 6 months, it's a short-term loan, and that just gets returned. So they're getting paid to wait, even though, so instead of getting the 1% at a bank or the 5% in your insurance policy or the 3% in your CD ladder, all this good, the best thing that you can do is the double way, where I still get to invest in my insurance policy, but also invest in this ARC deal. ARC Multifamily Group is run by my friend Robert Pereira. He's the CEO of ARC Multifamily Group, one of the best investors in the world, and they have a private credit, short-term debt option, which is great because it's backed by real estate. And so now I'm loaning monies while doing this and getting paid to wait, right? Pretty amazing. And this idea of getting paid to work. So that is idea number 2. All right, we're getting into the growth component. So if you remember in the original process we talked about, I walked you through the passive income operating system, exactly how we do it. I talked you through private credit and how we're going to wait. And now I'm going to take you through the growth vehicles. And I will tell you the growth vehicles that I've seen are the best growth vehicles that I've seen are are private access, that most people that don't have access to it call it private equity, are investing in companies, etc. All the people that you have seen that have made a ton of money, what has happened apart from Warren Buffett in the public markets? What has happened? Buffett's still investing in a company, right? But people have early investors in Uber, early investors in Facebook, early investors in Amazon, early investors in Tesla, early investors in SpaceX, early investors in Netflix. Those are the people that have made all the money. And that is venture and private equity, right? So you can invest in companies. And by the way, I completely understand that I have access to this stuff, that I get access to deal flow that most people don't get. You can still get access to this, by the way. You can go to AngelList, you can go to Fundrise, etc., to get access to this stuff. And it's a good idea. But when you go to this process, you want to do diligence, do your own research. You want to do diligence. The other thing I would also tell you is, the one thing that I've learned is to invest in groups. When you invest in groups, you have multiple people who take on the responsibility of doing research together, and you can talk about it in a less emotional way, which is a really good thing. But the other part of private equity that I'm really interested in right now is real estate, and not any kind of real estate. So let me actually walk you through what I did in the past, and let me walk you through what I'm doing right now. All right. So what I did in the past was, someone told me that I had to buy a bunch of single family houses. And when I say single family houses, it's these single houses that I had to buy. And then I had to go and then I had to buy them. And then I had to go and take each of these and then rent them out. You probably have been told that in some possible way. Now, I did this. I bought my first house for less than $100,000 in Mount Shasta, California, using credit cards. It was fine. But net, after everything, after the whole deal, I think I made like $7,000 net, and the headache was insane in this process. And I realized that in a 3 to 5 year period, I make $7,000, and the rent I was probably making a net $100 a month. I would have to scale this, I don't know, by 1,000 homes to actually like make this even worthwhile, right? Like that's a lot. Like I gotta do a lot there to make it even work. So even if you cut this in half, like if I have to buy 100 homes, like that's a lot. And so I have to like figure out how to do that. So instead I realized that if I didn't want any management, if I didn't want all of that, how do I get the best of both worlds? How do I get the best of both worlds? How do I get real estate and a business together? Because I love the intersection of the two. I believe that if I can get it backed by real estate and it's a great business, because I know businesses grow, then it'll work really well. So all I'm doing is investing in multifamily real estate. And I want to explain to you exactly how this works, because you may say, well, Sharran, I don't have access to that, all that. I'll show you how you can get access to it if you would like in some way, like, because I'm doing this right now. So the multifamily asset class is really, really interesting. So it's not like going and buying. So if you ever bought a home in a single family home, like a home that you were going to rent, let's say the market went up. Well, the home next door sold for $200,000. Well, your home that you own is probably comped at $200,000. But in a business, it doesn't work like that. You can have two businesses that are set right beside each other, and one is worth more, and then the other is worth more just because of how well it's run. And that's why I really love the multifamily component. So let me explain how this works. Multifamily is investing in apartment complexes, right? The apartment complex alone is a business. So how good operators, there are very few of them, by the way, good operators, not syndicators, good operators who own the entire capital stack and will manage this well. Think about it this way. The first thing to think about is, how do you invest in this macro environment? What's exactly happening in the macro environment are rates, tariffs, all of that, right? And the second thing, once you have the macro environment, they're like, hey, how does this work in a specific geography? For example, if you went to ARC Multifamily Group and you said, hey, I want you to, I have a deal for you in Portland, Oregon, like Robert and his team will not invest in it because they are completely focused on investing in the Southeast. They've built a network in the Southeast. They have a huge employee base in the Southeast. They have an operating infrastructure in the Southeast. So they're focused on understanding where this is. So most people will be like, oh, I got a deal, and they'll just go anywhere. They don't realize that markets change, state laws change. For example, in the state of California, you have rent control in many parts, but in the state of Georgia, you don't. So managing that is really, really important. The third is buying this asset or this complex itself. Like now you're doing diligence on this. And the greatest part is you don't have to do it. The operator, ARC Multifamily Group, is going to do that because now they know that they have to operate and manage it overall. But the best part of this is what I want to share with you, which is it is actually run like a business. So if you were doing a single family home, right, and it was worth $200,000 and a home next door sold for $180,000, what's going to happen? It's going to bring the price of your home down. This is called the comparables or the comps strategy, right? The business works a little differently. The business in multifamily works a little differently because it works on something called net operating income, meaning just like net income of a P&L that you're familiar with, it works on a multiple of this. So you can have 3 apartment complexes, 1, 2, and 3. You can have 3 apartment complexes. This one is probably not doing well. This one is probably not doing well, and this one's doing well. It doesn't matter. The one that's doing well will actually get more of the value. And it doesn't matter if all 3 of them are right next to each other. And that's why I really like this business, because it shows to the depth of the operator that is actually running this business. And that's why I like my family and my children investing in this, because it takes a minute to deliver on these returns. Now, you may say, Sharran, how does all of this work? I'm giving you some exact math here. So it may be hard for you to see. I'm going to pinch and zoom to show you all of this. The returns in multifamily are multifold. Right? First, it's based on the cash flow that you get over time. And then in a 3 to 5 year period, as in when the property sells, you get a big chunky portion then. You also get tax advantages in this process. And your capital is, you're first in the capital stack. So the operators don't even get anything until they get you all your money back. So let me walk you through this. So let's say your initial investment right now, your initial investment is $250,000. Well, that's year 1. Well, what happens? We're going to look at the cash flow and distribution. That is, so starting year 1, this is just a projection on one of the deals that we did. On year 1, we got that much. On year 2, we got that much. On year 3, we got that much. On year 4, we got that much. On year 5, we got that much. We got that back in cash flow, which was great. Which for a total of, we put $250,000 in and we got $85,000 back in cash flow, which is great. Then at the end of the 5-year period, they profit from the return of capital at sale. At the end of the 5-year period, we got $385,000. So now if you add up the $85,000 and the $385,000, you got close to $470,000, which means your net profit was $220,000. You roughly doubled, like on this deal, we roughly doubled our money from going from $250,000 with a profit of an extra $220,000. So this is a sample deal that we did. Hopefully that, again, I want to ensure that you want to, I'm just a random handsome guy on YouTube showing you stuff that he has done before, but give you a sense of this. If you want to talk to the folks directly at ARC Multifamily Group, you should totally do that. I'll put their contact information below. But just to get a sense of what a deal like this is helpful for and how you can do it. And this is exactly what I'm doing for my family, because in every 3 to 5 years, now they get cash flow. and they get the full pop overall. And I don't have to manage it at all. I will tell you this, people often talk about passive income. Passive income only works when someone else is doing the work. All right, think about this for a second. If it has to be passive for you, it has to be active for someone else. Okay, it can't be passive for everybody. Like, that doesn't work. If it's passive for you, someone has to do the work, so it has to be active for someone else. And in this case, it's passive for our family, but ARC Multifamily Group is doing the work, and they are full-fledged operators in this deal. And the reason I like this is because I can model something very interesting. Is I can generally model a 2x in 5 years. I can model a 5-year double, So if I put in $100,000 today, I can model, not saying expect, I can model roughly $200,000 in 5 years. And this is very interesting because I told you that I would show you the golden ticket, right? I told you that I would show you the golden ticket, and this is the golden ticket. And if this is worth the price of admission, this is the forever 5-year double. When I realized this idea for my children, it changed everything for me. So please let me explain this to you. So when I originally told Robert Pereira, the CEO of ARC Multifamily Group, that I was going to put, I'm going to make up some numbers. Let's say I was going to put, for my daughter, I was going to put $500,000 and kind of let it ride. And he said, Sharran, don't do that. There's a different way you can do it, which will give you the forever 5-year double. And I didn't know what that meant. So the baseline of this is not including tax efficiencies, not including any of that. If you think about the idea that every 5 years your investment can double, I want to show you what the forever double means. So he said, instead of making a $500,000 investment up front, do $100,000 a year for 5 years. And then you can stop and you never have to invest ever again, because your daughter will have a 5-year double happen starting from year 6 all the way into the future for the rest of her life, theoretically speaking. Again, I'm a random handsome guy on YouTube. I'm giving you the theory behind this, and it's very possible, and it's already started to come to life for our family. So let me explain how this works. All right. So let's say this is year 1. As you can tell, this is year 1, year 2, year 3, year 4, year 5. Right? So let's say in year 1, I'm going to turn my chair a little bit. I invest $100,000. Let's say in year 2, I invest $100,000. Year 3, I invest $100,000. Year 4, I invest $100,000. And year 5, I invest $100,000. Well, what happens? Well, in year 6, right, this gets the 5-year double. So in year 6, it's 200. That 500 becomes 200. In year 7, this becomes 200, which is this. In year 8, this becomes 200, which is this. In year 9, this becomes 200, which is this. And in year 10, this becomes 200, which is this. Do you see that? Right? It's really powerful. But the key part there is I had stopped investing right there. I'm done. I'm not investing anymore. I'm done. What it's doing is I get the forever double now. Now, if I don't touch it, think about something pretty amazing that happens here. Now, in year 11, this 200 becomes 400. So now I have 400, 400, 400, 400, 400, right? Now that's 11, 12, 13, 14, 15. Now in year 16, this does it again. So this 400 becomes 800, 800, 800, 800, 800. And it keeps going on. Again, this is the theoretical model, right? But I've already started doing this and it's already working. It's already working because you know why? This is how ARC Multifamily Group models its deal flow. So as long as they have the deal flow in this world, I'll actually use a highlighter to highlight it. As long as they have the deal flow in this world, and they have the deal flow in this world, maybe give the deal flows in all of that, and then I'll do a different color, deal flows in all of that. Then they have the deal flows in all of that, and then they have the deal flows in all of that. You're continuously getting to double your money forever. Right? This is the forever 5-year double. This is the golden ticket. This is what I wanted to show you. This is what I wanted to show you because up front, I wanted to tell you about this process, which is I wanted to show you the growth of vehicles, and I wanted to show you how all of this ties into the golden ticket, which is the forever 5-year double. I wish someone had taught me this in the past, and now I'm learning this overall. So I want to tell you about this. You know, a lot of people don't want to talk about money in some way, and society has almost bastardized, like, you know, they say money can't buy you happiness. Well, Money, yeah, you definitely cannot go and buy a can of happiness from Target. I understand that. However, I know so many people right now who a little extra income, a little bit more investment, a little bit more cash flow would change their lives. It would help them pay off some debt. It would help them get a better job. It would help them move to the house that they want to do. It would help them make that remodel. It would help them invest in their health, or get that surgery, or send their kids to college, or give money to charity. It would help them live a better life and live in a much more safe and confident way. And that's why I want to share with you these 6 words, that help guide a lot of things that I do, these 6 words that I share with my friends and family, these 6 words that are really, really important to me, both philosophically and personally, which is exactly why I'm making this video, so that you can have this too, which is to work hard, be kind, and make money. And not just work hard, be kind, and make money. I want you to work hard, be kind, and make more money. Hey, I really hope that this was helpful to you in this entire process. This is exactly what we're doing with my family and my children in this idea of making them millionaire kids. Sure, we can debate the philosophy of like giving money to children. All that's not what it is. The key part here is financial literacy, financial education. So we have a system, starting with the passive income operating system, getting paid to wait, working with our multifamily group, and actually doing the investment process overall to get them the ongoing forever 5-year doubles. I hope this was helpful to you. Remember, work hard, be kind, and make more money. Catch you on the next one.